off. Americans return to space as Discovery clears the tower.
All right, TTMTrades for the end of week review on the small account challenge. For we're gonna take $590 and turn it to $100,000 by the end of the year. So to end the week, we're up 152% on the account. We took the account for $590 up to $1,488 in 1 week. So I'm not going to go through everything on the trade journal as far as trade analytics and everything down below. We'll do that when we do the monthly summary of how we did for that month. We'll get into those figures because we'll have more numbers to work with, and those numbers will be more solidified as far as us making more trades. But what I will cover is this top half right here. So again, we started off with $590. Profited a total of $898.48 to bring the account up to $1,488.48. Okay. The total gain we made overall, altogether through all our trades, was $1,393. The total loss we took on all our trades was $494. Okay. Which gives us that total profit loss of $898. Some of our top trades per stock: the Beyond 114 put we took, we made $601 off of that. The Beyond 113 call, $478. Facebook 215 call, $231. And then some of our top losses we took was, again, the Beyond 120 call, lost $307 on that. And then the MNK 550 call, we lost $105 on that one. Okay. Overall distribution of gains and losses. We had one trade that was right in that 18 to 20% range, and then we had two trades that was way above 20%. And then again, our losses, we had one trade that was in the 4 to 6% range, which is where we wanted to keep our losses, in that 0 to 6% range. Had another loss in that 10 to 12% range, and then we took a loss above 20%, which is a big no-no. So that's a bad habit that we're going to have to cut pretty soon as our account grows, so that way we don't take those big of hits. And again, that comes with risk management. Okay. Overall trade statistics. So we had 3 winning trades, 4 losing trades. That gives us a win rate of 42.9% and a loss rate of 57.1%. And then our profit loss, on average, we made $464 in profit, and then on our average loss, we took a $124 hit. Okay, so for a profit rate of 79% and a loss rate of 21%. Okay, so our profit factor was a 2.82 with an expected C of $128. Performance thus far for the month, again, $898. That brings the account up to 152% gain for the first quarter. Again, that first quarter will cover January, February, March. We didn't start in January, so that only leaves us February and March for the first quarter. So again, we're up $898. As we continue all the way into March, that first quarter number will change. This is our equity curve. As you can see, that 590 start, and then we jumped up, and then had a drawdown, another push up with another small drawdown towards the end of that trade. Okay, what we want to see is this equity curve continuously go up, just like a stock that's trending in the uptrend. Okay, with slight pullbacks, but still continuing upward, making higher highs as we move into that $100,000 realm. And then the weekly performance curve, just how I did for this week. As you can see, a strong jump, and then we just kind of flattened out for the week going into the end of the week. So let's review some of our trades. Stock positions, again, these are the trades that we made gains on the left hand side, and the trades we took a loss on the right hand side. All right, kind of fits in with the first page, but broken down in a little more detail. Now, trade log. Again, these are all the trades that we took throughout the week, the date, the stock code, what we chose to do, the price in which we bought in, the total shares. Again, we're trading options strictly this year. So if I say 300 shares, that's me saying 3 contracts. 100 shares, that's me saying 1 contract. Okay. The overall fees that we had to pay per contract. Each brokerage has their own fee that they charge. E-Trade charges me 50 cents per contract. the net amount we spent, and then the average price once we calculate the fees into that. Okay. The amount that we gained along with the percentage, and the amount that we lost in that trade along with the percentage, and then how many days we held. Okay. Our equity curve, our 1R, okay, with R representing risk, the amount of risk we want to take on one trade. So initially I said 6%. After taking my first loss, I readjusted that R down to 3%. Okay, so 1R represents I'm willing to take a 3% hit on my total account per trade, and then 3R represents uh, I'm I'm willing to make 3 times that amount that I'm risking. Okay, and that one we need to change because okay, there we go. So 10R, okay. Normally, I'm willing to take a 3% risk, but on average, I can make a 30% or higher gain. So that's why it's 10R, okay. 10 times that 3% that I'm willing to risk equals 30%, okay. The setup that we saw on those trades and the reason we bought and sold, okay. So what we're gonna do is we're gonna go through each trade and then look through the chart and go through the setup and everything. So this might take some time. I know everybody wanted me to go through the trades in detail. So the first trade that we're going to look at, not the MNK trade because I held that one for 2 or 3 days. That'll be the last one we review. So the first one we'll look at is the Beyond 113 call on February 6th, what we were seeing that day. So just looking at ticker Beyond, we know it was getting rejected by the 150 period moving average, which represents the weekly's middle Bollinger Band, as you can see here on the higher time frame. I've explained that in a lot of my past videos. When I trade, I'm either utilizing the 2-hour chart, depending on how big of a trend I'm trying to catch, and or I zoom in on the smaller time frames if I want to catch a smaller move just to make some quick profit. So we really traded with the 30-minute chart and the 5-minute chart a lot this week, making sure that we look at the daily chart to see what the overall trend is, and then zooming in into the smaller time frames to kind of identify where we fit within that trend to make trades. Okay. So with that being said, on February 6th, as you can see here, and then my mouse, it shows up black on the chart. I don't know why. So what I'm gonna do is I'm gonna click the screen and you should see it light up, so that way you can kind of see where my mouse is at. So again, on February 6th, starting off right here, we seen that ticker BYND went on the strong downtrend, uh, back right here from 130 all the way down to 102. All right, and with that being said, the PMO clearly illustrated that, as you can see here, had a nice bounce up to reflect that 130 run up, but again, unable to break above its 75 SMA. Okay, so that lets me know that that's a temporary run up, and the overall momentum has not shifted. And then again, on each run up, the PMO is still below its 2 averages, which shows me the stock is still in the overall downtrend. Okay, I utilize the PMO to identify the overall trend. Okay, once I begin to see that the trend was shifting, as you can see here, it crossed over both its averages, and then the price action broke out of this downtrend, because again, the downtrend consists of the price action unable to break above its middle Bollinger Band and hold. Okay, so rejected, again rejected, and then finally we get a break above right here, and then as it pulled back, you get some slight consolidation, constantly holding above the middle Bollinger Band, with the Bollinger Band squeezing to show that the volatility is low and the price action is in a consolidation point. Okay, so again, we know that volatility is cyclical, so where there's low volatility, high volatility will follow. So we knew that with the Bollinger Band width being below its average and the band squeezing to reflect that, we knew that a breakout was going to happen soon. Okay, now which way the breakout is going to go, the Bollinger Band width does not tell you that. It just simply tells you the price action is consolidating and it has to break out sooner or later. Okay, the bulls or the bears, someone has to take control. It can't move sideways forever. All right, now what kind of helps me gauge which direction is going to break out is which direction the PMO is shifting. Okay, and we can see the PMOs of both its averages, so that kind of gave me a fair idea that the bulls were pretty much in control of the price action, and it was going to break out to the upside, along with the Shande trend meter holding above its 2 averages right here, as you can see. All right, so just based off that technical analysis, we knew we would possibly get a breakout to the upside, so we positioned ourselves with 113 call, seeing that that was the current resistance, right where that one standard top deviation Bollinger Band was at. So once the price action broke out on the 7th, pushing up to 120, that is when we cashed out of our position on the 7th, and we sold out of that beyond 113 call at 898. All right, so we bought in on the 6th at 419. We bought one contract. As the price action broke out on the 7th, we sold that one contract for $8.98, profiting $478 for 113% gain. Okay, and that's 27 times our risk that we were willing to take at that time, which is 3%. All right. Next, we jumped back into Beyond. We did a Beyond 120 call on the 7th, and then we sold out of that Beyond 120 call on the 11th. All right, so let's go back and look at ticker Beyond. So ticker Beyond on the 7th, as it began to pull back, the biggest thing we wanted to see was that the trend was going to hold. It was either going to, as it pulled back from the 120, it was going to find support here on the one standard deviation top Bollinger Band, and or hit that middle, the 2-hour chart's middle Bollinger Band, which is 150 period SMA, and then find some support. So as we started seeing the price action pull back on the 7th, right in this area, and we zoomed in on the 5-minute chart, we started noticing on the 5-minute chart accumulation, same system. PMO was moving out of a downward trend. It crossed above both its averages on the 5-minute chart, and it showed that the momentum was shifting. So with that being said, we repositioned ourselves again with the Beyond 120 calls that we bought in at 380. All right. Once we positioned ourselves, my mind was set that ticker Beyond was going to push up to 124, right where the yellow line is at, the 150 SMA on the daily chart. Okay, because that's where it was sitting at right at that time, at 124. So we positioned, well, I positioned myself well, and with the idea in my mind that it was going to push up to 124. When it broke out the following morning on the 10th after the weekend and pushed up to 122, I was actually up $650 on that trade. Okay, and instead of locking in those profits, my thought was that it was going to push up another dollar to at least attempt that 124 push. So I held on to the position. All right, as I held on to the position, it immediately retreated on me and pulled back from that 122 spike up where I was up at $650, and then it pulled back on me, and I think I was up maybe $100 or so or something like that, give or take. So then again, we noticed that it was pushing up again, and I thought it was going to attempt that 124 push, and when it had pushed up one more time, I think I was up right around $400 to $500. And instead of cashing out and taking what the market was giving me at that time, I continued to wait for it to attempt 124, which is what I had locked in mind already. And then it immediately retreated the price action and began pulling back. And when it began pulling back like this on the 5-minute chart, I started noticing that the PMO was turning downward, and it was losing momentum intraday. So with that being said, I went ahead and cashed out of that Beyond 120 position. As you can see here on the 11th, I sold and I took a $90 loss on that trade. Now, my biggest thing was I was up $650 on the trade. The market had gave me money, and by me locking into my mind that, I was supposed to get more, I stayed in and got greedy, and the market immediately retreated on me. Okay, so with that being said, I annotated the reason for selling was the 5-minute PMO was beginning to reverse, and it was consolidating at the same time. So what I was seeing on the 5-minute PMO was, as a price action pulled back, as you can see here, these tickers were in a tight range, and on the 5-minute chart, it was reflecting that nice and solidly. The price action was consolidating on the 5-minute chart, and then the PMO began trending down. So that let me know the price action was going to break down. So again, luckily I got out on time, because as you can see here, it took a dip down to 116, and we was able to exit before that happened. So took that $90 hit. I did annotate right here, and as I'll zoom in, I said with expiration 3 days away, because again it was Tuesday and I had only bought contracts for a Friday expiration, because my plan wasn't to hold the Beyond contracts for a very long amount of time. It was maybe hold them 1 or 2 days and get out. So I bought Friday expiration date contracts. That way I can minimize the amount of time. The amount I pay for time value. So annotated on there with expiration 3 days away. Do not have enough time to stay in position for a possible pullback. I said greed, $600 profit initially. Okay, just to annotate what my mistake was on that trade. So we got out of that trade, took a $90 hit, and then again we bought another beyond 120 call. Okay, this is me being a knucklehead on the 11th as that price action finally dipped down, and then we got out of that one on the 12th. We bought in at 6.15, and then we got out of that one on the 12th at $4, taking a $216 hit on the account for a 35% hit, 35% loss on that particular trade. So we'll look at that one on the 11th, and then got out on the 12th. All right, so on the 11th, we got out, took that $90 hit as the price action dipped down right here. My thought was that it was going to go on a downtrend. So immediately on that dip down on a 5-minute chart, you can see buying coming in, and the PMO began to turn back up, and then it immediately ran back up very strong. So when it ran up like this with such a wide candlestick and that spike in volume, again, I had locked in my mind that we was going to push 124. So I immediately bought 120 calls, which you can see is right where the middle Bollinger Band is at on the 30-minute chart. So as I bought the 120 call on that spike in volume right there, of course the premiums on those options was up a little bit, so that's why I got in right around $6. So soon I bought in on that candlestick, the price action began again consolidating sideways, and without me paying attention to my actual setup on the chart, because again I still had that 124 locked in, I would have noticed that on the 30-minute chart the PMO was already trending downwards and crossing below its averages, even though I had this little spike up, long candlestick here. I would have seen that the PMO was already losing momentum, and there was no way that we was going to go in an uptrend, okay? Which, if I would have followed this signal right here of this breakdown, I would have stayed out and probably initiated puts a lot earlier. But again, bought in on that candlestick spike right here. Again, the RSI hasn't even crossed above both its averages, and then the Shande trend meter again is getting rejected by its averages. So my setup was telling me that calls aren't a good idea, but I myself had 124 locked into my mind and really thought we was going to push that. All right, so instead of following the charts and the setup, I went against that. So immediately the price action began trending sideways, and on the 12th, as you can see here, 5-minute chart, price action was trending sideways, trying to break above the 30-minute middle Bollinger Band, which is 150 SMA yellow line, and as it attempted, it got rejected and then began pulling back. I started noticing the PMO on the 5-minute chart was starting to flatten out to show that it was losing momentum, which was a fair warning for me. Again, because I bought right here on that spike. And then as the price action began to reverse with the PMO showing that, as it broke down right here, I immediately cashed out in this area and got out at $4, which again, that's why I took that big hit of $216. All right, so finally, after taking 2 back-to-back losses, I told myself I need to snap out of it, and I need to follow my overall charts and setups and stop going against my setups. Okay, I can't tell myself, I can't try to anticipate the price action and say what I believe is going to happen in my mind. I have to actually follow the charts and the setups and what's being presented to me and go with the flow of things. Okay, so with that being said, once I snapped out of it, I immediately bought on the 12th beyond 114 puts, and then we sold out of those puts on the 13th. We bought in at 98 cents, and then we sold those beyond 114 puts at $2.70, making a $684 profit for 173% gain on the account overall. So we talked about that in the Discord. And then again, if you want to follow my trades and everything, the Discord link will be down at the bottom for you to join the room. But I put out right here, right before we ended that trade, I said it closed out beyond 120 call at 6.15 for $4. Put a big X right there to represent that I took a loss. And I said I opened up 114 puts. The 30-minute chart is failing to break 119, and the closest support is 114. And that's the setup we were seeing on the 30-minute chart. So with that being said, like I said, I cashed out right here. Those 120 calls, I took that big hit, and I immediately bought 114 puts literally right on this doji little candlestick right here on the 5-minute chart. And then immediately right before the closing of the day, the price action spiked down right here, and I was hoping it was going to break that 114. I knew 114 would be a strong line of support, because anytime another rule of thumb, the price action breaks out of the Bollinger Bands on one time frame, you zoom out to the higher time frame to see what the price action is going. So once it broke out of the bands and started pushing down further, zoomed out to the 30-minute chart to see where that line of support was at, and I saw that the 2-hour chart, the 150 SMA middle Bollinger Band, was sitting right there at 114. So I knew the 114 would be a strong line of support to break. So we held on. The following morning, the price action continued, but it was holding in that 114 range right here. I started getting nervous. I was going to cash out because I didn't want to give back the money that I was already up on those 114 puts. But again, this is why you have to discipline yourself to follow your signals, okay? Even though you want to lock in the money, your signals should be what tell you to get in and out of the stock, okay? So with that being said, even though there was a lot of buying power, and you can see those long candle wicks at the bottom showing that 114 was trying to be held, instead of me getting out, I said, let me follow my signals, okay? So with that being said, the PMO was still trending down, and it wasn't flattening out in that general area at the time. So that let me know that the momentum on that downward trend was very strong, and then that 114 wasn't going to hold. So my biggest thing was, one, the PMO is still trending down. It hasn't broken above its one standard deviation Bollinger Band and held, because anytime a stock is in a strong downtrend, this one standard deviation Bollinger Band represents a 10-period SMA. So it hasn't broken above that, nor has it attempted the middle Bollinger Band at any point in time, right? The price action hasn't shown any type of strength to push up to that middle Bollinger Band. So we stayed within the stock on the 114 puts. It finally broke below that 114. And then as the price action got right here and started consolidating sideways, and I started noticing the PMO was flattening out, and the RSI was finding support on its averages, along with the Shande finding support on its averages, that is when I cashed out, because the signals was telling me, all right, I need to get out. The price action is consolidating, and before it spikes back up and you lose profit that you're up on the contract, just go ahead and get out. So that's when we sold the beyond 114 puts at 270, making $684 and taking that 173% gain. Okay, so next we'll talk about ticker MNK. So I bought ticker MNK on the 5th. Bought 3 contracts at 30 cents on the 5th of February, and then I added to that position on the 11th of February. I bought 3 more contracts at 25 cents, and then I finally sold out of that position on the 13th, taking a $100 hit, okay, which is a 33% hit on that trade. But based on my position size, I didn't have a big position size on it. That wasn't a major hit to the overall total of my account. I think it was like maybe a 5% hit on the total account. But in that particular trade, based on my position size, it was a 33% hit based on my position size in the trade. So what was we looking at with ticker MNK? Okay, because again, I was up on ticker MNK on multiple occasions. Again, I just never cashed out and profited and took what the market was presenting to me. So we'll bring up ticker MNK. All right, so our initial position was on February 5th, ticker MNK, 550 call. So as you can see here, ticker MNK was on this uptrend, pushing upwards, holding above the two top Bollinger Bands, and was trending very well with the RSI holding above its averages. One thing I should have kept in mind is, even though the price action was trending up, the PMO was still flat and it was unable to break above its averages. Okay, so even though the price action is trending up, the PMO was still way below its averages, and that showed that even though the price action was going up, it wasn't a lot of strength behind it to continue that uptrend. So with that being said, on the 5th, same thing. Ticker MMK was on a strong downtrend, as you can see from here all the way down to 410. The PMO reflecting that finally crossed over, and then again it didn't cross above its averages until right here on this spike. All right, so once it crossed above its averages and started ticking up, I began looking for positions in ticker MMK. All right, so once I saw that ticker MMK hit its top 1 standard deviation Bollinger Band and was finding support, that's when I made an entry for 550 calls on ticker MMK for 30 cents. All right, my idea was that ticker MMK was going to make a run up to 550, possibly break above it. Looking here on the daily as it's holding on its Bollinger Bands, I zoomed out to the weekly. At that time, the top 1 standard deviation Bollinger Band on the daily was sitting at right around 545 to 550. So my idea was that we were going to break that top 1 standard deviation Bollinger Band and reattempt the 2 standard deviation top Bollinger Band, the tail line right here, right around 630. So I bought in at 550 thinking we was going to reattempt that 630. I had drilled that into my mind, saying that that was what was going to happen. And with that being said, it never happened. All right, so we had that run up. I bought in right here, positioned myself on the 5th. We had to run up to 530. My actual calls that I bought in at 30 cents at that time had ran up to 40 cents. And I could have cashed out and took the profit from that small run up. But again, I had it in my mind that we was going to retest that 632. So as the price action began to pull back, on the 7th, I repositioned myself and added more to my position, buying 4 more contracts at 35 cents on the 7th. So again, price action ran up to 530 as it began to pull back, and it found support on that middle Bollinger Band. On the 7th, I immediately repositioned myself because the 5-minute chart was giving me a signal that it was going to make another run up. So I repositioned myself, bought 4 more contracts at 35 cents. And then right at noon, the price action ran up to 549. All right, and my contracts that I bought in at 30 cents and 35 cents, which I think I was averaging about 32 cents a contract at the time, had ran up to 45 cents. All right, which again, profit. I'm up on the contracts. I should have locked in that profit, allowed it to pull back and reposition myself. But again, I had it locked in my mind we was going to break above 550. So then on 11th, I bought more 550 calls, adding to my position, because again, it pulled back from that 540, and then again, it was holding above that middle Bollinger Band. So on the 11th, I bought in as the price action pulled back, actually. Okay, so as the price action pulled all the way back in this area, again, I was down. I think my contracts went down to like 25 cents or 20 cents that day. And then on the 11th, I bought in 3 more contracts at 25 cents, building into my position. Now, the reason I bought in right here, right when it hit that $5 range, was because that's where the support was at on the 11th, the middle Bollinger Band on the 2-hour chart. So even on the 30-minute chart, it looked like it's free falling. As we was getting those long wicks in that area, as I zoom out to the 2-hour chart, I noticed that there was the 2-hour chart middle Bollinger Band. So again, I repositioned myself. Again, looking at the PMO, hasn't broken above its averages, so the momentum isn't even strong enough to make a 632 push, which I had drilled into my mind. So as the price action again made another run up, this time pushing 553, I think my contracts was worth like 45 cents again. And I was up a little over $200, and instead of locking in that profit and again getting out on the pullback, I held ticker MNK, and then finally on the 13th, I just went ahead and closed that position out at 21 cents a contract, taking $105 hit. All right, because on the 13th, I started noticing the price action. If we zoom into the 5-minute chart, on the 13th, as we made that 553 push, all right, I thought we was gonna pull back again, get some buying power right in this area, and then begin making another run up above 550, maybe up to $6. And my intention was to cash out because I've been holding this one for too long. And pushed up to that 553. I thought it was gonna push up to $6. And then I began noticing that the PMO was starting to lose momentum. Even though the price action was moving in a sideways consolidation pattern like this, the PMO was beginning to converge on its averages, which tells me that we're losing momentum and the buying power is beginning to go away. So immediately on the 13th, I closed out those MMK calls, those 550 calls. I closed them out, like I said, at 21 cents, and I took a $100 hit on the 13th. All right. Once I saw the PMO crossover like this and started trending down, that's when I hurry up and closed out of my position. And then no more than a day later on the 14th, it finally broke down and fell back into that 440 range, which correlates to the daily's middle Bollinger Band. As you can see here, ticker MMK on the 2-hour chart is pulling back towards right here in that area. Okay. So I'm glad I closed out of it in time, that and I didn't take that big dive down back down to the daily's middle Bollinger Band, because my contracts probably would have been worth only 10 cents. I would have took a big hit on that position size within that trade. But again, just like with that beyond 120 call where I was up $600, greed played a part in that one. And again, instead of me closing out of that position and taking that $650 profit, I got greedy, thinking that it was going to continue to push up and I could make more, and I held it until I took a loss again. So as you can see here, greed, no stop loss. And then the same thing with the MMK 550 call. Instead of me taking a profit, you know, at the time my contracts was worth 40 to 45 cents when I bought in at on an average of 32 cents. Again, I had it locked in my mind we was gonna push up to that $6.30 to $6 range, and I held instead of taking what the market was giving me, which again was greed and no stop loss. And I took a hit and took $100 hit on the account at the time. Okay, so with that being said, those are like the two biggest lessons I want you all to take from this, is to always take what the market gives you and follow your signals. Right? Don't go off some hunch or something you believe is going to happen. Go with what the chart is telling you and just go with the flow of the market, because you know the market is always going to be right. You'll never be right. Okay. So with that being said, we close out those MMK calls and we closed out of the Beyond calls. So we positioned ourselves into Facebook based off Facebook setup. We'll pull up Facebook here. All right, so we positioned ourselves in Facebook on the 13th. All right, 2 days ago. That was on Thursday. We bought 215 calls, February 215 calls on the 13th for $2.03. And then we sold those contracts for $2.13. That can't be right. I think I bought into those contracts at one. Okay, yeah, I'm tripping. Okay. So the initial buy-in on the contracts, February, the 215 Facebook 215 calls was $1.75. We bought 6 contracts, and then just based off the setup, we added more after we sold out of that MMK position. We took the money from that and we added one more contract at $2.03 because Facebook was beginning to break out. So Facebook, February 13th, we can see that Facebook had this strong pullback here. I think this was due to earnings or something happening right around that time. I'm not sure. But the key thing was it did not break out of the bands, which shows that Facebook wasn't going to go on a strong downtrend, nor did it fall below those, fall in between the two lower Bollinger Bands. When price action starts consolidating in that area, then that shows that there's a lot of selling power, and that the price action could possibly go on a downtrend, as you could see here when it fell in between those lower Bollinger Bands and it kept making lower lows. So with Facebook, it immediately dipped down into that area, and then a lot of buying came into play and it started holding it back above its bottom one standard deviation Bollinger Band. So we knew that 209 was a strong line of support. The biggest thing was we wanted to position ourselves within that 209 range to get this run up to attempt that 214 and possibly 220, which is this 2 overhead resistance right now, and just take the spread in between. So we zoom in to the 2-hour chart. We see the 2-hour charts PMO, which was on this downtrend, reflecting it, finally flattening out, and it's starting to trend up, breaking above its averages. We see that the Bollinger Band width is below its average, showing that the price action is consolidating in a tight range. Low volatility leads to high volatility, so we know a breakout is bound to happen here soon. And we see that the RSI is holding above its averages, finding support along with the Shande. So these are all good signs that we are moving into a upward momentum with a breakout pending right around the corner. Okay, so we went ahead and positioned ourselves on the 13th. Right here when Facebook had the breakout that morning, and then as it pulled back, we positioned ourselves right here for the run up on Facebook. So Facebook ran up right in this area. It began to pull back, found support, and then as it pushed up into that 214 area, that is when I cashed out because I began noticing on the 5-minute chart it was losing momentum. So looking at the 5-minute chart, we can see here again we positioned ourselves on the 13 right here on this pullback, and then as it began to run up here, as it began to pull back, again my contracts were up $350 as it pulled back here right before the close on the 13th. I think I was up $98 on the contract. So we noticed overnight the futures was doing pretty well and the market was going to gap open. So it gapped open the following morning on the 14th and began pushing up. But even though the price action was pushing back up, the PMO was unable to curl back up and break back above its averages, which tells me that's a false breakout to the upside, and the bears are still in control as far as momentum and pushing this thing back down. So with that being said, we cashed out of those Facebook calls that morning, and took the $231 profit for overall 18% gain on the account. And then sure enough, the 5-minute PMO broke down, which, you know, the price action broke down, and then it found support on the middle Bollinger Band and started trending back up. All right, so with that being said, the price action trending back up, we bought back in that day on 215 calls and 220 calls to close out the week, seeing that the 5-minute PMO had recovered intraday, which supported the 30 minutes chart continuous movement towards trying to break out, because you can see here it's consolidating on the 30-minute chart and the 2-hour chart. So going into next week, we think we can get a nice breakout on Facebook to reattempt those ranges of 215 and 220, right where its 2 overhead resistance is, and possibly get a 5-point spread on our contracts and then cash out of them. Okay, and that's how we're currently positioned. Now this is where I begin over trading, trying to close out the week and make a little bit extra profit. We took one last beyond put to close out the week, and I'll just pull up the 2-hour chart and the 30-minute chart because that's where we was focusing a lot of our attention on these trades. So again, my own predicament on Beyond was, if I pull the, let me pull the Discord down here. On Beyond, we annotated, keeping an eye on Beyond to retest 114 to 115 area before buying more puts to ride it down further. So the idea behind this was, we've seen the price action consolidating once we sold out of those puts, and it began consolidating right here, creating a double bottom with the PMO trending up. So we knew the momentum was shifting back into the bulls' favor, and we seen that the Bollinger Band width was pretty low. Low volatility leads to a breakout. So again, we knew the breakout was going to be to the upside just due to the fact the PMO was trending up, showing that the bulls were in control of this time right within that 111 range. So as it pushed back up to reattempt at 114 and 115, it actually broke above it, pushing up to 117. And then as the price action began to pull back, the idea behind that was it was going to pull back completely back down to 111 to make a triple bottom. All right, so we was going to play 114 puts to ride it down further back down to that 111. So again, bought in right here by the open Beyond 115 puts at 349 for February 21st. Beyond puts in play, next line of support is 108 to 102 worst case. All right, and the reason we got that 108 to 102 is if you zoom out, you can see here on the 2-hour chart, it was felling the 2-hour middle Bollinger Band. So my idea behind that was it was going to fell again and begin pulling back And this time, if it broke that 111, it'll find support at 108 where the last Bollinger Band was at. And if that failed, then it would find support at 102, right where the 150 SMA was at. So we started riding this one down. We positioned ourselves right here. As the PMO began crossing over, the RSI was already trending below its averages, unable to break back above. So we knew the overall momentum was shifting. All right, early warnings from the RSI, unable to break above its averages. The PMO flattening out from that uptrend, and then the price action consolidating. So position ourselves. We started riding the puts down. Now, mind you, my account is under 25,000, so I have to follow the pattern day trader rule. So again, as it began trending down, I think I was up $120. I just didn't want to cash out because I didn't want to violate the PTD rule. And then I also believe that it was going to go back down to that 108 to 111 range. So with that being said, we continued watching as it hit that middle Bollinger Band, not middle Bollinger Band, but as it hit the 150 SMA, which represents the 30 minutes chart, middle Bollinger Band, as you can see here, it started finding support. So it hit that 30-minute chart, middle Bollinger Band. Immediately, buying power came in on a 5-minute chart, and then it started consolidating in a downward movement, holding above the 1 standard deviation Bollinger Band. So for me, I knew that that was a warning that buying was coming back into play and it was going to reverse. So I kept watching the PMO to see if the PMO would break its average, the green line right here, the 75 SMA. And if it broke through that 75 SMA and the zero line at the same time, then I knew that this would continue on the downtrend. So I just wanted to follow my signal. So I stayed with my signal, held on to the position. Once the PMO hit that 75 SMA, it started curling back up. Once I noticed it started curling back up and then the buy-in pushed it, it broke it back above that middle Bollinger Band. I knew that the momentum was shifting back in the Bulls' favor on the 5-minute chart, and it was confirming in the 30-minute chart consolidation above its middle Bollinger Band, showing strength. So immediately once that happened, I immediately hurry up and cashed out because I knew it was reversing, and I knew at that time I was over trading, and I went ahead and took that $83 loss where I bought in at $349 and sold at $330. So yeah, over trading on that one, took a small hit, and we can see that ticker beyond is possibly reversing to head back up to the upside to retest 119. But we'll see how that one plays out going into next week. So overall for the week, did I do good? Yes. We took the account for $590 all the way up to $1,488 in a week for 152% return on the account. Very good. As far as my statistics, am I happy with them? No. A lot of greed played into my trading this week. A lot of my losses, well, of my 3 losses that I took, all 3 of them was profitable at one point. I was up on every single one of them, and instead of locking in that profit what the market gave me, I got greedy, and immediately the market took it back away. So follow your signals, and if the market gives you money, take the money. You know, it's 252 trading days in a year. You know, you can always come back the next day and reposition yourself and make more money. Okay. My average win, you know, on average, I was making 102% return on each trade, which isn't bad, you know. But my average loss was a 21% hit. Now, granted, that's a little over a 1-to-4 risk to reward ratio based off the average win, average loss rate. But I mean, still, it's 21% hit per loss, and that's not what we want to take. Again, I said at the very beginning, starting this at max, we wanted to take a 6% hit on the account total if we were to go max risk. All right, our 1R is 3%. All right, we wanted to average a 3% loss if we were to take a loss, and then make 10 times our risk, which is a 30% return on each trade. So going into next week, what we want to do is, one, we want to not get greedy. If the market gives us money, we want to take that money and go with it. Don't let greed kick in, or what we believe is supposed to happen dictate us staying in the market. All right, if the market tells us it's time to get out, it's time to get out. 2, we want to manage our risk a little bit better. All right, we averaged some pretty big hits on the account. Granted, our position size management was pretty well. So even though we may have taken a 21% hit on that actual trade. Since our position size was handled pretty well, it didn't damage the overall health of the account. Now granted, two of those plays did damage. Well, one of those plays really damaged the overall health of the account, where we took a huge loss on that beyond 120, where we took that $216 hit. We can't take those big hits like that. Okay, that was a 7R. That was 7 times the risk I wanted to take. Okay, I only want to remember 1R is 3%. That's all I want to risk. At most 2R, which is 6%. For me to take a 7.38R hit on the account, that's too big of a hit to the account. Okay, I mean, I was averaging a 2.8R, 2.4R, a 1.7R. I'm fine with those because that's about a 3 to 6% hit on my total account on those losses. But to take a 7R, that's a pretty big hit, and that's not one we need to be taking, because that will deplete your account if you take too many of those in multiple trades. So that's what we want to do going into next week. Better risk management, control our emotions as far as getting greedy, and make sure we follow our trade signals to a T. All right, if the stock market and your trade signals is telling you to get out, get out. All right, what you believe supposed to happen and what you anticipating doesn't matter if the market's telling you something different. Okay, so again, TTM Trades will do another weekly review after next week. We know Monday the market is closed, so that leaves us 4 days of trading. Again, we want to continue at this rate with us closing a week out at $1,488. We can highlight our profit target sheet as yellow, and we can put an X right here, closing, showing our progress so far to 100 grand. Okay, so next week we want to at least try to get up to 3 grand, so that way that puts us a little bit closer to our objectives. Again, remember, once we reach $23,000 in the account, what we're going to do is, because right now we're positioning ourselves 100% in each trade, give or take, okay, based off position size management. I haven't done that this week. I was kind of spreading the account out a little bit. But once we get to 23,000 in the account, remember, our position size is going to break down to 50%. So what we're going to do when we get up to that 20,000 range, we'll only trade with 50% of the total account, which will keep us back down to 11,000, which means we'll only trade with 50% of the account at a time. Again, with a 6% risk total on those positions, and that'll give us a total 3% total risk on the overall account as we position ourselves with a 50% position and a 6% stop loss. My damn nose is itching. I don't know why, but progress, yes, great. Can we do better going into next week? Yes. All right, TTM Trades, the Discord is down below. If you want to follow my trades, join the Discord. If you have questions, join the Discord and shoot me a message. But until next time, I'm out. Goddamn nose.
Houston, Tranquility Base here. The Eagle has landed.